This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Holiday cheer. Santa delivers a positive day for stocks and delivers another record for the Dow and S&P. So is the rally named for the jolly man in the red suit in full swing? Starting to spend. Strong sales of big-ticket items show businesses are spending, and that's a good sign for economic growth. And feeling blue, our market monitor has 3 blue chips that he says are must-owns in 2014. All that and more for this Tuesday, December 24th, 2013. Good evening, everyone, on this Christmas Eve. I'm Susie Garrett. Tyler's off tonight. So it looks like Santa started his rounds a little early today. Stocks edged higher thanks to some encouraging data about manufacturing and housing, and we'll have more on both those topics in just a few minutes. Traders called today's gains the start of a so-called Santa Claus rally. That's when stocks rise in the final 5 trading sessions of the year, and on Wall Street, that's a bullish signal for the new year. Today, investors and traders spread a little holiday cheer to each of the major averages. The Dow and the S&P posted new all-time highs, and the Nasdaq had its best close in more than 13 years. The Dow rose another 63 points, the Nasdaq was up 6, and the S&P added 5 points. Over in the bond market, worries about whether the Federal Reserve would taper its stimulus and cause a sharp spike in interest rate has been a big headache for bond investors. Just ahead of the Fed's taper announcement last week, investors in mutual funds pulled more than $8 billion out of bond funds. That's according to the Investment Company Institute. That makes 12 weeks in a row of bond outflows and the most in 1 week since August. More now on that strong manufacturing data we told you about. Orders for long-lasting durable goods rose a better than expected 3.5% in November. The Commerce Department said demand increased for a range of goods, including commercial aircraft, machinery, computers, and electronics. Business investment in new manufactured goods saw its biggest jump since January. Well, that rising demand in manufactured goods, especially for autos, aircraft, and heavy machinery, may have led to a comeback of sorts in steel. Prices are higher, and so are shares in some of the nation's biggest steel makers. Morgan Brennan has more.
Steel yourself for a rebound in steel? Strong auto sales, the U.S. housing recovery, and a flood of orders for long-lasting manufactured goods all helping push demand higher for the hard-hit commodity. Experts say global appetite for steel could grow in 2014.
As we head into 2014, we're looking very positively at the demand side. We expect that you could see demand as much as 6 to 8% higher, again led by non-residential construction.
So why does that matter? Steel was one of the industries hit hardest in the economic downturn, as construction ground to a halt and as the auto industry faced multi-billion-dollar bailouts. Nearly 5 years later, steel has yet to recover. But stronger economic growth in both the U.S. and in Europe could be leading the way for steel's long-awaited rebound, adding more proof that a recovery is here to stay. Ratings firm Moody's recently upping its outlook for the industry to stable, saying steel saw its bottom earlier this year. And investors seem to agree. Several steel makers posting strong stock gains in the final days of 2013. United States Steel Corporation climbing more than 6% this week and up 80% over the past 6 months. Another industry giant, AK Steel, has jumped more than 10% through Tuesday, clocking 6-month gains of 150%. These companies have been beating the street with recent earning reports, posting surprise, though still modest, profits, and inspiring a number of analysts from Cohen & Company to Goldman Sachs to issue stock upgrades. Still, headwinds persist for steel.
Steel production in China is forecast to go down. Pollution controls are shutting down steel production at a rate that is considerably higher than anyone had forecast. So we think that's going to come in for a rude awakening.
For Nightly Business Report, I'm Morgan Brennan.
More now on today's housing news. Contracts to buy newly built homes declined more than 2% in November from the month before, but there was a big upward revision to October's already strong sales. New home sales are now running at a 5-year high, but not all the housing numbers may be squaring up. Diana Olick explains.
U.S. home builders are putting up more homes. And more importantly, they're selling them. Contracts to buy newly built homes were running at an annualized pace of 464,000 in November, down slightly from October, but October saw a huge surge.
It's right. There's a huge demand.
Brian Koester is an appraiser and works with home builders Pulte and Taylor Morrison.
I think there's a sense of urgency with people that they should have, that if you don't do it now, within a couple months or within 6 months, rates are going to keep going up and up, and you're going to miss the opportunity to get a 5% or 4% rate.
Stocks of the builders surged on the day's news. This after Miami-based Lennar, one of the largest public builders, last week reported a 13% quarterly jump in new contracts, stronger than its peers, but a sign that the higher-end new home market is recovering nicely. The lower end, however, for both new and existing homes is slowing dramatically. Investors have depleted most of the distressed housing stock, and first-time homebuyers are still locked out of the market by tight credit. Witness mortgage applications to purchase a home, down 4% last week and down over 10% from a year ago. This as rates moved only very slightly higher. The culprit may be higher premiums at the FHA, the government's mortgage insurer and a favorite among first-time buyers. FHA mortgage applications are down 25% from a year ago. So if first-time buyers are out, what's pushing the demand for newly built homes? Well, some of it is still tight supply of existing homes for sale. But there may also be a new wild card in the new home market. Investors using all cash are turning to new construction. It's the next step in the rental play. For Nightly Business Report, I'm Diana Olick in Washington.
Now, even with all those new homes getting sold, applications for new mortgages fell to a 13-year low last week. The Mortgage Bankers Association says demand dropped off when rates ticked higher following the Fed's decision to taper back on its bond buying stimulus. There are just 4 trading days left this year, and James Dunnigan expects that Santa Claus rally to continue right through New Year's Eve. He's managing executive of investments at PNC Asset Management Group. So, Jim, we end this year obviously on a very high note, but when you're this high up, it makes you wonder how much higher can stocks go in the new year?
Well, that's the question on investors' mind these days, Susie, as you said, but certainly Santa has delivered. Ended up the year with an update today, and we do believe that this Santa Claus rally, which will go through the first couple of days of January, will continue. We on the backs of very strong economic data.
So what is your outlook for 2014 in terms of how much the major averages could go up? I mean, you're coming off of a really strong year, up 30% or so.
Well, as you say, we have benefited from the asset purchases of the Federal Reserve over the last couple of years, but particularly in 2013, we'll see almost a plus 30% year on the S&P if you include dividends. Not likely we'll see that in 2014. We're more in the single-digit range, something in the 8 to 12% range, depending on how earnings go. But it will be a positive year for equities, just not investors should not forecast what we've seen the last 12 months.
Well, there's been a lot of talk among market strategists about a correction or two coming up in the new year. Now, investors are always told you can't time the market, but I'm still going to ask you a question about that. If there is some kind of a correction, are investors better off waiting for that pullback to happen before they put any fresh money into the markets?
Well, if you look back at 2013, Susie, investors who tried that were not very successful. So all we got was a 6% correction. Now, on average, over the last 33 years, the intra-year decline is about 14%. So in all likelihood, we will see a decline in 2014 larger than the 6% we saw, probably something in the range of 10%, maybe to 15%. Hard to predict when that would be. So I would suggest investors not try to time that market, but understand what their plan is. If they're allocated to equities, underinvested in equities here, they put a plan in place early in the year to invest throughout the year. Over that time frame, they'll be mostly right. Not likely they'll get it all the way right by trying to time when that downturn will be.
All right, so we've got 4 trading days left for this year. Are there, you talk about an investor plan, portfolio plan. What should investors be doing? Is there anything they should do within this deadline time, or does it make a difference? Should they be buying things, selling stocks?
That's the question. And certainly with an up 30% year, not likely they have as many losses in their portfolio. But certainly the first thing you should do is take any losses so you can offset that against any gains that you have in your account. I would suggest probably not recognizing gains here in the last 4 days of the year. But investors should take this opportunity. If you've been fully allocated to stocks, you're now overweighted in your portfolio allocation. So I'd start to take the opportunity to rebalance your portfolio. Certainly opportunities in the developed countries, Europe, emerging markets. So to allocate away from U.S. stocks if you have benefited from this rally in this market. And then look at the risk in your fixed income portfolio. This will be a year we'll see negative returns in bond indexes. Look where your durations are, where your risk is, and try to de-risk some of your fixed income portfolio against what we would suggest is a rising rate environment in 2014.
A lot of important decisions you have to make. Thank you so much, Jim, for coming on the program, and happy holidays.
Thank you, Susie, and happy holidays to you.
Thank you so much. Jim Dunnigan of PNC Asset Management Group. American Express agreed to pay at least $75 million in fines and to repay customers for what authorities called misleading marketing tactics and bogus billings. The credit card giant was accused by 3 regulators, including the FDIC, for charging some cardholders for extra services like ID theft protection when they didn't even enroll in the program. Amex was also charged for overstating the benefits and coverage time for an account protection product. Now, this settlement is the latest in a series of actions against other credit card companies for misleading consumers of the benefits of add-on products. Coming up next, it's all about the consumer. Retailers are making one final push this year for the customer's dollar, and our market monitor has the consumer names for you to own for 2014. That's coming up. In case you weren't keeping track, there are now 0 shopping days left before Christmas. So retailers have pulled out all the stops to get more consumers inside their stores. Sarah Eisen has more on the final push to get a piece of your holiday shopping dollars.
It's 4:30 a.m., Christmas Eve, and Shirley Ruiz is leaving Toys R Us with a shopping cart full of presents.
It's very full here. I mean, they have a lot of toys.
If you think that's early, think again. Across the country, thousands hit stores before dawn because, well, they were open.
I think it's a great idea. Some people, unfortunately, have to wait till the last minute. So it's a great idea. I think it's awesome. I think it's awesome they're here.
Kohl's locations like this one have been open 24 hours since early Friday morning. Select Macy's stores as well, and Toys R Us opened its doors early Saturday morning. Its flagship store in Times Square has literally been open since December 1st. The question is it going to pay off in what appears to so far be a pretty lackluster holiday shopping season?
There will always be that one-off person that has free time at 3 in the morning, but in general, I don't really think it's helping retail. It's just adding labor hours and potentially hurting margins.
Macy's says our shoppers love that we give them options, especially with late night and early morning hours. The former CEO of Toys R Us says it's a winning strategy.
The shoulder hours, like from midnight to 2 a.m. or from 5 a.m. on, are actually quite busy. And if you compare that for these stores that are staying up all night to an average day in the middle of February, these are really busy hours, so they are profitable.
Part of that 24/7 convenience is what's driving more shoppers online this season. Online sales the weekend before Christmas surged 40% this year compared to last. 20% of that came from mobile. Keep in mind, online sales only make up 6% or so of total retail sales. That means brick and mortar retailers are pulling out all the stops, even if it means staffing a store in the middle of the night. In Secaucus, New Jersey, for Nightly Business Report, I'm Sarah Eisen.
Shares of Tesla revved higher after the electric car maker received a safety stamp of approval, and that's where we begin tonight's Market Focus. Regulators reaffirmed the 5-star safety rating of Tesla's Model S for 2014. Now, that's despite recent incidents where 3 of those models caught fire after crashing, and those fires are still under investigation. Tesla shares popped 5% to $151.25. La Quinta has confidentially filed for an IPO. There are reports that the hotel chain that's owned by investment firm Blackstone is seeking to raise as much as $4.5 billion in the offering. The price and the number of shares won't be decided until after regulators review the filing. Shares of Blackstone ended the day slightly higher to $31 and change. There are also reports out today that the Carlyle Group is close to pulling off a deal with Johnson & Johnson to buy J&J's blood unit. It's a transaction that could be worth about $4 billion. The healthcare giant has been looking to sell the division since it's a small player in a market led by big rivals like Roche and Siemens. Shares of Johnson & Johnson were up slightly to $92.06. W.R. Grace has finally reached an agreement with bank lenders. That was the only remaining appeal left in the company's bankruptcy settlement. The chemical maker will now emerge after a 12-year stay in bankruptcy. It filed for Chapter 11 back in 2001 after an asbestos leak led to lawsuits. Shares today rose almost 4% to $98.53. CalAmp posted solid profit and sales and beat analyst estimates when it reported quarterly results today. But shares of the satellite technology provider tumbled after the company disappointed investors with a weak profit outlook. The stock plunged 7% to $25.63. Baxter is recalling 2 of its injectable solutions after it found particles in the products. The healthcare company has warned of blockages and organ damage, but it says it hasn't received any reports as of yet. Despite the news, Baxter shares rose a fraction to $69.06. And Time Warner reached a distribution deal with Viacom just a few days before the old contract was supposed to expire. The deal with Viacom, which is the parent of Nickelodeon and MTV, is in sharp contrast to Time Warner's battle with CBS last summer. You'll remember that difficult negotiations led to a blackout of CBS programs on Time Warner's TV system. Shares of Viacom were up a fraction today on the news to $85.60. Time Warner Cable also rose 1% to $134.04. As we continue our special week of Market Monitors, our next guest says, if you want to know how the stock market will do in 2014, follow the mood of the American consumer. Joining us to explain, James Lowell. He's Chief Investment Officer of Advisor Investments. Hi, Jim. Nice to have you with us.
Great to be here.
So tell us about your investment strategy. What's the connection between the American consumer and how stocks are going to do in the new year?
We pay a lot of attention not to what consumers are saying, but what, in fact, they are doing with their money. That has been a bellwether recipe to figure out ways to profit, not just, I think, in 2014, but also over the last 5 years when at any given moment people are writing off the U.S. consumer. It also has a positive ripple effect around the globe. We think we're seeing European consumers turn a corner in an early stage recovery there. And we think if we get early stage recovery in Europe and a mid-cycle stage recovery in our own economy here, that's going to lift the emerging markets, which of course were the worst performing markets in 2013. So by focusing on what the consumer is doing, by focusing on what they are buying and where they are buying, we think we'll be able to figure out ways to profit from it.
Okay, that's great. And you have 3 blue chip stocks that you think are must-owns for 2014. Let's go down them quickly. You have American Express at the top of your list. Tell us why you like it. And at $88, can investors still make money on this? Look at that chart. It's really had a great year.
It's had a spectacular run this year. It is, though, I think, going to still have some success in 2014. Probably not as spectacular as it was in 2013, but I wouldn't be surprised with a 15% gain. It is a direct reflection of not just consumer spending, but small business spending, and also the overall lending environment in which it finds itself is increasingly favorable. So we think American Express is likely to benefit.
Okay, great. Now you have Home Depot also on your list. Tell us why you like this. Also, it had a good year, and it's trading at $80 now.
One of the reasons we like Home Depot a lot is that it's not just where homeowners go to upgrade or take care of their own home, but it's where local builders go to build the 1 to 5 houses that they build. And we think we are going to continue to see a housing recovery. We know there's low inventory and pent-up demand. The risk, of course, is rising mortgage rates. But we think in this environment, with moderately faster growth in 2014, that will help offset even the toll of slightly higher mortgage rates.
All right, and your third blue chip is Ford. You're really bullish on this one. What's your attraction to Ford, and why Ford, not GM?
Excellent management at Ford, I think, offsets what will likely be a net good year for GM for all the car sales and manufacturers going forward. But Ford in particular, because of that excellent management, I think is going to have a better handle on how to drive profits. We also like the fact that Ford is likely to benefit significantly from a slight turnaround in Europe. We saw the first consecutive months of net car sales in Europe in both October and November. We think that trend continues in 2014. So we like Ford both as a domestic play on a strong U.S. consumer, but also as a stealth play on the reemergence of a European consumer.
It's $15 trading now. If you buy it now, what can you expect by next year at this time?
I would say in the $18 to $20 range, especially if no risks sort of impose themselves on this moderately faster growth economy that we think we're heading into in 2014.
Terrific. Any disclosures to make, Jim?
We don't own any of those individual stocks, either myself, family, or firm, but they are certainly inside of the mutual funds and ETFs that we do own.
All right, terrific. Thanks so much. Have a happy holiday.
You too.
Jim Lowell of Advisor Investments. And coming up on the program, it's been a banner year for stocks, as we've been telling you, and shares of Yahoo were a standout, more than doubling so far. But that's not the only reason why company CEO Marissa Mayer was a difference maker this year. That's next. We continue now our week-long series called The Difference Makers. These are profiles of some of the most important people in business and finance over the past year and the impact that they've had. And over the last 12 months, the influence that Marissa Mayer has had on floundering Yahoo has been tremendous. John Fort has the story.
If you were writing the first act of a turnaround story, you could hardly do better than Marissa Mayer has in 2013. Yahoo shares actually closed above $40 a share earlier this month. Now, to put that in perspective, aside from 2 months around 8 years ago, the stock hasn't seen those levels since the year 2000. Why the rally? By Mayer's own admission, previous management invested in Chinese e-commerce giant Alibaba and in Yahoo Japan, which have seen their values skyrocket. But there's more to it than that. In 2013, Marissa Mayer established herself as both a hands-on product executive and the most marketing-savvy CEO in Silicon Valley, all but forcing employees and investors to believe in Yahoo again.
Vince Lombardi was a phenomenal coach. One of his sayings is, he was like, look, my priorities are, God, family, and the Green Bay Packers in that order. And so I joke that mine are God, family, and Yahoo, except I'm not that religious, so it's really family and Yahoo.
Product-wise, she managed to build and buy some interesting properties. In May, she paid just over $1 billion for Tumblr, a sought-after social media darling. Early in the year, she bought Sumly for $13 million, a company more notable for its 17-year-old founder than for its actual technology. Yahoo's results? Well, where it counts in the company's revenue, Mayer's not moving the needle yet. Search advertising is holding its own, but the core business, display ads, is stagnant at best. Mayer's preaching patience. She says she needs time to launch new products, which will draw bigger audiences, which will lead to higher sales. And investors seem to be listening. Mayer's putting a fresh face on what lots of people had begun to see as a stodgy company. Her face. There was that Vogue spread, and she began hosting earnings calls as live video, something a less telegenic CEO might avoid. In 2014, though, she'll probably have to deliver on those top-line results, and she'll have to avoid product stumbles like last year's fantasy sports outage and this month's Yahoo Mail fiasco, since Yahoo needs every loyal user it can get. For Nightly Business Report, I'm John Fort.
And finally tonight, a wake-up call about coffee. The price of coffee beans plunged this year, but the cost of that cup of joe barely budged. Big coffee sellers who have been brewing up higher profits all year long say there's a good reason for that. Kate Kelly explains.
Coffee's had a rough time this year, at least in commodity markets, where contracts pegged to the value of beans grown around the world trade. Thanks largely to oversupply from Brazil, an important source, commodity prices have dipped almost 20% so far in 2013, and some traders think we are either at or near a bottom. Partly as a result, shares of the big coffee sellers like Starbucks, Dunkin' Donuts, and Green Mountain have rallied huge. But they didn't pass those savings on to consumers, at least not all of them. Statistics show that in the U.S. alone, the price of coffee fell only about 7% in the average city. And some coffee drinkers are a little upset by that.
It's a little frustrating, obviously when you buy a lot of coffee from places like McDonald's, Tim Hortons, Starbucks, big chains, and they're getting it cheaper and you don't see anything, it's a little upsetting.
We're a big coffee culture now. Lots of people drink coffee, lots of people like it. So if there's a market there and people are buying it, then they don't need to compete with prices.
You're welcome.
Mike Nugent, who trades coffee and other agricultural commodities, says to consider the process involved with buying large quantities of coffee beans in the first place.
When you go to buy your cup of coffee, you say, well, gee, coffee prices are at multi-year lows. How come the price is not going down? That assumes that the coffee in your cup was purchased the day before yesterday. It wasn't. It may have been contracted 2 to 3 years ago at a higher price. It may have been stored for years and financed for years.
Perhaps that explains what Dunkin' brand supply chief Scott Murphy meant when he said to me that for next year, Dunkin's many franchisees have locked in coffee prices that will bring stability and favorability to their markets. What that means for the average Joe, however, is not exactly clear. For Nightly Business Report, I'm Kate Kelly in New York.
And that's Nightly Business Report for tonight. Be sure to tune in tomorrow for our holiday special, 2013, the year that was. Have a very happy holiday. I'm Susie Garrett.
Nightly Business Report has been brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Susie Garrett with the Nightly Business Report news brief. It looks like Santa started his rounds a little early today on Wall Street. Stocks rose on this Christmas Eve, and that sent the Dow and the S&P to fresh all-time highs. On a short session for the markets, the Dow added 63 points, the Nasdaq was up 6, and the S&P tacked on 5 points. Orders for long-lasting durable goods rose a better-than-expected 3.5% in November, with demand for commercial aircraft, machinery, computers, and electronics all higher. Contracts to buy new homes declined a bit last month, but there was a big upward revision to October's already strong sales, which are running at a 5-year high. And worries about rising interest rates is one reason that applications for new mortgages fell to a 13-year low last week. Be sure to tune into Nightly Business Report right here on your public television station.